What's up everyone, and welcome back to my channel. I hope you guys had a great weekend. I know my weekend was fantastic. I did my due diligence on this new stock Lemonade, and today I'm going to share with you 5 things that I found out about Lemonade that I think you should know if you're going to invest in this company or you're already invested in it. Now before we get into the video and I discuss the 5 things, my name is Cash. This channel is all about investing with cash. If you like my content, hit that like button, hit that subscribe button. Now the first thing I want you to know about this company is what exactly is their business model? How do they attract customers? What do they actually do? Which sectors are they involved in? The sector they're involved in right now is renters insurance, and they have already expanded to pet insurance as well as life insurance. And another thing that you also want to focus on is what exactly do they do? How are they different from their competition? So the Lemonade is actually a renters insurance company, and they have expanded themselves to the pet insurance as well as life insurance. The CEO specifically mentions how trust is the most important aspect for this company. The way they do this is very simple. When a customer pays premium to them, they have a standard collecting fee that they just take out from the premium. The way traditional insurance companies work is very different, because traditional insurance companies get paid after they have already paid for the claims. So it's in their best interest to not pay for the claim, versus Lemonade, their business model is really good because they take out a flat fee and then they pay off for claims, and whatever remains, they donate it for the charity for customers' cause. One of the things I want to point out about Lemonade is that they appeal a lot to millennials. It takes about 90 seconds to get insured and about 3 minutes to get paid. Usually, insurances take quite a long time to process and get the claims paid off and things like that, while Lemonade has made it very simple for its users. Second, their costs are really cheap. So let's actually talk a little bit about what the businesses Lemonade is involved in. As I mentioned, they're involved in the renters business, they're involved in the homeowners, they're involved in the term life and pet insurance. Let's look at their prices. So they're actually quite cheap compared to a lot of competition, which I'll be talking about in a bit. But you can see that the renter's price is actually $5 a month, or starting from $5 a month. Home insurance is $25 a month. Term life is $9 a month. And pet insurance is $10 a month. They're actually pretty fast at acquiring customers. In the last 2020 year, they've reached 1 million customers, which is pretty insane for an insurance company that is in such an infancy stage. That is one of the coolest things about Lemonade, is that they are able to attract customers at a much faster rate. Now, I've said a lot of things about the company's business model, how they're attracting customers, how they're actually processing claims, how they're distributing themselves in the market. But the second thing you also want to focus on is what are their financials? What are their numbers? What do they look like? Because that is very key when it comes to understanding whether this is a right business for you to invest in, or whether there are some things that you want to be careful about. So now let's take a look into the financials for the company. So this is actually Lemonade's income statement. And looking from December 2017 to all the way to December 2020, you can see this is all in millions, by the way. So the revenue in December 2017 was 2.4 million. It went to 22.5 million in 2018. In 2019, it went to 67.3 million, which is quite an impressive jump, more than 3x, which is nice. And in December 2020, revenue was 94.4 million. Of course, the jump from 2018 to 2019 was a lot bigger than from 2019 to 2020. However, the revenue still did go up. Now let's take a look at the operating expenses and the income, which is another thing I like to look at if I'm assessing the financials for a company. So the operating expenses in December 2020, it was 30.4 million. In 2019, it went to about 175 million. And in December, it ended up, so you can see the operating expenses in 2017, these numbers are, I think, a bit shifted. In 2017, it was 30.4 million. In 2018, it was 75.1 million. In 2019, it was 175. So that's a lot of expense jump right here. That's over 100 million. So that's definitely something to consider. So from 2019 going into 2020, this jump was not that much. However, the operating income also went up. So the idea is that the revenue is going up. However, the expenses are also going up, and the expenses are more than the revenue. So this is one of the things I think investors should understand that the company is not profitable as of right now, but the price of the stock is actually factoring in a lot of growth. This graph actually shows the price to sales ratio for Lemonade, and it's actually 47 or 46.17 times. You should be looking at the whole picture. You should not just be looking at the price to sales ratio and decide whether the company is worth investing in or not investing in. You should be looking at the full picture and the full story. But with that being said, this is one of the things I do look at for this company, and the price of the stock is actually 46.17 times its sales. That means the stock is trading at 46 times its actual sales, which is pretty nuts. Now, some other things I also want to discuss from this income statement is their earnings per share. So you can see that in the 2017, their earnings per share was $2.58. It went to $4.84 in 2018. In 2019, it went to $9.75. This makes sense because the revenue almost more than tripled. So their earnings per share was huge, but then it declined to $3.63, and now it's again still the same. It would be really interesting to see their earnings next week and kind of take a look at these numbers and see where the company stands right now. And that would be a huge catalyst. I would definitely want to be checking out the stock and closely monitoring it to see how it's moving and how the company is performing. Now, this is something else I also want to be talking about. So these are the financial statements again, but this is the balance sheet for Lemonade. And one of the things I want to point out is their total assets. So this is something else that I do look at as to whether the company has a lot of debt or not, or are they accumulating a lot of debt or not. So let's take a look at this. If their total assets, if you look, so from 2017 all the way to 2020, they found that their total assets have continuously gone up, and right now they're at 828.7 million in total assets. But you also want to look at the liabilities of the company, and the liabilities have been going up. However, they're a lot lower. So let's take a look at the total assets. It's 828 million. The liabilities 287. So if the company was to, let's say, sell off all its assets and all its liability, it is still actually has a lot of money. So they're not bankrupt pretty much. So they're going to be in the market. And also look at their cash equivalents. They have about 570.8 million. Company does have money, and they're not going to be going anywhere anytime soon. The third thing that I find interesting about Lemonade is their expansion into the car industry. Recently, the news came out that the company is trying to get itself into the car insurance industry, which is actually 70 times more than the renters as well as pet insurance. And there's a lot of big competition for Lemonade standing out there. There's Geico, there's Allstate, there's State Farm, but the CEO is actually taking a big jump and going into the car industry and putting themselves out there in the competition. So that's going to be really interesting to see, because their focus is that they want to attract customers, then they want to bundle up their options so that they can benefit the most as well as the customers can benefit the most. That is going to be one of the really important catalysts that I would be keeping in back of my mind. Now, the fourth thing I want to talk about is the cash that Lemonade already has. Now, the company has a lot of cash, as I also mentioned. Since they have so much cash, they're going to be around in the market for a long time. However, the big thing you also want to be careful about is, are they just burning through the cash, or what exactly are they doing with that cash? Are they spending on expansion? Are they spending on marketing? Are they saving the cash? The company is not generating any profits. They're in loss right now. So if that's the case, you do want to be thinking about whether you're investing in this company for really, really long term, or are you investing in it for like a couple of years and you think that the company is really going to disrupt the market for insurance and actually figure out a way to keep their business model sustainable for a long time, then it makes sense to actually invest in it long term, maybe 5 years, maybe 10 years. So the fifth and the final reason is, as an investor, what are some things you should be looking into for the company if you're in it for the long term? So one of the things that I already mentioned is I would want to see some sort of revenue progression as well as expenses going down. Their revenue projections have been pretty good so far, so I would want to continuously see that because they're trying to disrupt other insurance agency markets. Second is how sustainable is their business model in other areas, because right now the market share for Lemonade in the insurance, especially the renters and the life insurance, is very small percentage compared to big players like State Farm and Allstate. Lemonade has a market share of 1.6% compared to State Farm, which has about 16%. And with that being said, if it's 1.6%, they don't really have a lot of share. Their market cap is 5.1 billion right now. And if they can even get to about 5% of the market share, that's actually quite good because that's 3 times their market caps. And right now, the company's valuation is 5 billion. So if they're able to get to 15 billion, that's actually quite good. I mean, in car insurance, they haven't even entered and they're going to enter in June. So their market share is 0%. And when they do enter, it's going to determine as to how much of a market they're able to get. It is 70 times more in terms of the total industry compared to like home insurance or pet insurance, but is Lemonade really going to be able to take over? That's something that you have to ask yourself, whether you believe in the company to take over in the car insurance or not. Third thing is I would continuously want the company to keep attracting more and more customers. That's something else I would want to see at a rate that they're already going at, and I wouldn't want them to slow down. That's another thing I think you should be monitoring for this company as an investor, or if you're just a speculator person. So those are 5 things that I think are interesting about Lemonade, or some things that you want to be careful about if you're invested in the company. Let me know in the comment section down below as to what you think about Lemonade. I'll link the sources down below as to what I used to go over the financial statements and some due diligence that I did on my own. Hopefully that helps you. You can definitely read it on your own time. Hope you guys find this content entertaining and informative. If you have any questions, leave it in the comment section down below. Again, my name is Cash. This channel is all about investing with cash. If you like my content, hit that like button, hit that subscribe button, hit the notification bell, and stay tuned for the next video.